Good morning, everyone. Today is the 24th of June. We're moving into a very interesting market move right now. The ceasefire was on and then off. We're looking at a pretty wild ride in volatility in the markets. This is Brad Matheny again. Sorry, moving through my Tuesday morning. Been getting a lot of comments from people regarding my cycle patterns. And I want you to understand that the cycle patterns are these things are just really about 1/10 or 8% really of what I deliver in totality to my subscribers. So when you're looking at these are designed to be a gauge, a daily pattern gauge for what may be likely. You need to pay attention to the long term trend, the short-term trend, the price action, the daily bias, the weekly bias, which are both bullish right now. We are generally in an upward trend. I keep talking about how, I expect this rollover. If it happens, we are below the upper range. This is called the ultimate high. This is all Fibonacci price theory. I've done dozens of videos over here under my video list. You can look under my videos. They're way back. They're called Mechanics of Trading. They're more than a year, but probably about 9 months ago. Long and short of it, guys, is there's a lot of resources out here teaching you Fibonacci price theory, Gann angles, Tesla techniques, all kinds of things in real-time examples to show you how to apply some of these techniques. Now, in these little 8, 10, 12, 20-minute videos that I do in the morning, I can't really go over all of the details and all of my analysis that I deliver to my subscribers and to people who, are let's just call them subscribers, lack of a better word. The long and short of it, you guys are getting these little free snippets of my cycle patterns. You're getting this 1/10 or 1/8 of my total market research. I have tools for traders that are designed to help them ride the market trends, which I can't show you because of TradingView's restrictions. I have techniques and tools and algos that are running, generating buy and sell triggers. I have been able to show you those. Those are very simple. I can come over here, log in real quick, show you the tools for traders, intraday tools, TT scanner, intraday tools, SPY spider, cycles, daily. There you go. The only thing that we're technically long the markets on as of yesterday is XLI and XLK as of the daily charts. That's on the spider sectors. The only thing long that we are on based on the main ETF list is IXN, QQQ, IGM, XLC, ARKK, brand new trigger, IXJ, short trigger, IWM, GDX, XAR, QQQ. Looks like I've got QQQ in here twice again, and RWX. So again, these algos run daily, 60-minute, 15-minute, 5-minute, 2-minute. You want to follow the 5-minute trend? Come down here and follow the 5-minute trend. Intraday triggers delivered to you every day. Okay. Not only that, you also get the options algos. These are 2-minute. I'll go to 15-minute. The way these work, you pick a trigger like this. You go across the trigger line, bullish, bullish. That's +1, +2, +3 over here. -1 bearish. That gives us a +2. General trend. Now you would be trading this upside move. And also the way these work, these operate as kind of broad trigger levels. So theoretically, anything above 69.19 on this ARKK would potentially be a topping pattern, maybe reverting back down, and anything below 68.38 would potentially be a bottom pattern reverting back up. So you would look at the reversion coming back into the 68.89. That's a 50-cent move. Here, 67. That's about a 50-cent move. So you have a reversion capability of moving from these lower levels, 60 or upper levels, 69.18 to 68.74 on a reversion. Otherwise, if we're in the middle and we get to this call, what's called a call trigger level right here, 68.74, we get close to that, you could place a call trade with a strike price somewhere around 68 or 69.18. And again, this is an example of an all bullish trigger. You can see the capital bullish here, it's stronger trending, +1, +2, +3, +4, good solid trending. And you have, again, very narrow range. So it's not really tradable, but you have a very narrow range. USRT here is bullish as well. You have a 20-cent range. This is on a 15-second or 15-minute chart. So again, you get some momentum here. Here's bearish SDS. This would be all bearish. You'd be looking here. You have basically a 5-cent range on the 15-minute chart. Again, 15-minute doesn't give you fantastic big triggers unless you're looking at a larger stock. So here, again, a 6-cent range. So you need to really be looking at something like QQQ, giving you here bearish, 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 bearish as of the close of trading yesterday. And that would give you, again, a 2, 3, a little over 3.5 point range. So you have these Fibonacci algos or these options algos triggers. Then you have the Fibonacci algo triggers, which again, you come in here, you look at the QQQ, the trend is bullish. The last trigger level breached was 532.74, and that gives you these upside targets here that you would be looking at on the left side in green. Same thing here. KBE is bullish in a contractionary trend. Last trigger level was 54.25. You would be looking at these upward potential targets. Obviously, 51.34 and 53.73 is below this trigger level. So we'd be looking at 54.92 as the primary target. XIYC is bullish in an expansion trend. We would be looking at anything higher than this 96.09. That gives us these two levels. It gives us about $1.40 to about $2.10 rally phase. Again, IBB, no trigger crossed. So Nugget is bearish. Okay, at last crossed the upside trigger. We'd be looking here potentially at these two levels to the upside, but general trend is bearish. RWX is last trigger cross was to the downside. It is bullish, so we're in a moderate pullback. We would be looking here at anything below this level, which is basically 26.59 and 26.70. You get how it works? You look for these bullish markers. This is the last trigger level crossed, these bullish price levels, and that tells you what, price moves up and down as you're seeing here. So with these Fibonacci trigger levels, when we come here and we cross down, if the Fibonacci trigger level is here, it then projects where price may go to the downside. So that's what we're looking for, is that type of crossing pattern. Again, the research and the analysis that I have on top of the ongoing tools, which, like I showed you, I can't really tell you about them, but because of TradingView's restrictions, the point I'm trying to make is what you're seeing here with the SPY cycle pattern is 1/10 or anywhere from 8 to 10% of my total analysis. If you're a day trader and you want to follow along, you need to understand that these cycle patterns are general descriptors of what may happen, and you need to adopt an A or B type attitude. So today is a flat down in trending mode. That means that we're going to be likely seeing a flat down. We've got the ceasefire is now broken. Both Israel and Iran were launching missiles at each other again. Don't know what's going to happen here. Markets up overnight, back up towards these highs on a flat down pattern. I would expect the markets to consolidate here and meander back downward, maybe aggressively with a carryover of yesterday's crush pattern. We could see a pretty aggressive downward move. Now, if it fails, then we're going to open up at these levels and we're going to get the opposite, which is a rally phase. So there's your A and B mode. That's what I want you to kind of think of with these patterns. What if he's right? What if he's wrong? Okay, if I'm right, we're going to get a flat down pattern that's going to move us back down to 600 or 601 or 602, maybe a little lower. If I'm wrong and the markets take off, we're going to see a move up to 607, 608, maybe a little higher. Remember, the flat down is telling us again that we should be fairly consolidated, and we are in that short-term warning phase, meaning that we have rolled a little bit here, and we could see some more consolidation in this area. Okay, in the QQQ, same type of thing. Flat down. We're rolling over. Currently trading at 537, up 1%. 1%'s a pretty good move, guys, and it's back up here near this high. So again, flat down could be, should be more like this into a flat down type of a pattern. And an invalidation or breakaway would be from here, possibly up to new all-time highs. So QQQ is much closer to all-time highs than the S&P is. So we could see this move sharply to the upside, and moving into Q2 earnings here, we could still see technology bounce upward. Now, what would happen if we bounced upward? We would technically move into invalidation, and we would look for rejection. So if we rallied up into this area and stalled, we would look for rejection again, coming back down. If that were to happen, be very similar to what happened back over here, and we could see rejection move down all the way back down into these lows like I've been warning. Okay, so moving up here is potentially very bullish, but it also sets up a bull trap potential to the upside. Okay, so let's come over here to gold. Gold is selling off again. And now this is a very interesting move, moving us down here to the 330 area. We need to be aware of this 330 area acting as support. I want to highlight it right here. We need to be aware of that 330 area or 3300 area acting as support. The idea again here, guys, is that gold is reacting to fear. What is happening overnight is we had the pause. We stalled back out over here as of Monday at the end of trading overnight. We weakened. And then now the war potentially is back on as Israel and Iran are trading missiles with one another. I still believe this ends fairly quickly. I believe personally that Iran is going to be looking for a way out. They've got to get control of their radicals because Israel's not messing around. Israel has learned that that you stuff enough weaponry down these terrorists' throats, and eventually they fold. Their bluff folds. So again, I think that's the same thing that's going to happen here with Iran, is that Israel's really looking at, what do we have to lose if we just keep going? And if they don't back down. Okay, the gold cycle pattern is an inside breakaway. We are in warning in normal trending mode, and in long-term bullish price action, we are in trending with an inside breakaway. Obviously, this is breaking away to the downside. I'm looking for silver to try to hold up near these lows, 35.50, and I'm looking for gold to try to hold up above 3,300. Yeah, I'd like to see gold make a big move to the upside, but as fear is playing out because of this conflict, guys, gold is going to do what gold does, and normally gold, a move like this in gold indicates some level of panic. And I will tell you that generally some level of panic like this indicates that the U.S. markets, the S&P and the QQQ, would move into some level of panic as well to the downside. So you can see that when, if I bring this up, sorry, I got the sniffles this morning. So when we get into panic mode, like right here, you can see that as we panicked into this selling low, gold panicked into this deeper low. Okay, as we rolled up here and we moved into this panic selling, gold reached a high and panicked into a low. Okay, as we moved over into this area, which is where the fear, the rally in gold set up here, we reached kind of a panic mode back over here. What are we going to do? How is this going to play out? This was Trump dealing with the tariffs. And then boom, we had the extension, the 90-day pause gapped us up. The deal was set. And you can see gold moved into that panic mode as well. Okay, so if we get some kind of a conflict here where gold continues to panic, moving back down to that 3,300 area roughly here, then I would believe that we would be looking at some sort of a panic in the market here as well. Okay, and then lastly, we will come back over here to Bitcoin. Bounced all the way back up yesterday. Rejection again off of this low. I still believe that we're looking at a downside move. Let me get rid of gold here. I still believe we're looking at this downside move. We have broken. Now, I will add that, if we hold at these levels and we hold above that 98, 97,000 low, then there's a chance we could come back up and try to take out this ultimate high and really rally to the upside. But again, the actual structural pattern is that, without any impetus of growth, we're going to likely move to the downside like this, down into consolidation. That would be, in my opinion, the highest likelihood pattern setting up here because of this big, broad excess phase peak pattern and because of this even bigger excess phase peak pattern over here. I'll do it in purple or some brighter color, red. So there's the big, broad excess phase peak pattern. Here's the little excess phase peak pattern. In order for this little excess phase peak pattern to play out, we need to move down here into consolidation, right down here, hypothetically. And if we stall here and revert back to the upside, that would be invalidation to the upside. And until we get above that high, we are trapped in this pattern, which again, ladies and gentlemen, you need to understand that, it's the same Fibonacci price theory I keep teaching you. Here's our range. There's our ultimate high, our rotation. This is our consolidation zone, our flagging zone. We're either going to get above this high and rally, or we're going to get below this low. I'll mark it in red and sell off into consolidation. And again, same thing I've been telling you for weeks, but now come back over here. SPY. Look at this, guys. Okay. Same consolidation zone. This is the zone here in this gold color box. We're either going to break up above this level and rally. That would be technical invalidation. Or we're going to come all the way down and break below this level and sell off to the downside. And that would be a continuation of the excess phase peak pattern. So understand that, I'm teaching you to use these techniques the same way that I do on an intraday basis, end of day basis, weekly basis. I want you to understand that Bitcoin is set up the exact same structure within this tight, narrow little flagging formation, as well as having this big, if I were to show it to you, this big range here as the gold consolidation range. There's our range. And this was rejection right up here. We got up above these highs and we moved downward. That is rejection. So in these videos, I'm trying to give you some insight some knowledge, some skill, trying to teach you how to read price charts. Notice I don't use indicators. And what I'm trying to teach you basically is how to use your own skills and the skills that I'm teaching you to understand price data and price setups. Everything that I'm teaching you here can be applied on 2-minute or 1-minute or 5-minute charts. Okay, you can do this on your own. You don't need, quote unquote, me. You can understand that price always attempts to make new highs or make new lows. That's the basis of Fibonacci price theory. And I am just teaching you again how to understand, theory and opportunity and what's going on. So this new low right here, give you an example. This new low right there, that sets up a breakdown low, and failure again to get above these highs here or here, or in this case, we'll see how we do today, but we have one more back up here. Failure to get above these highs right here would indicate that we are going to roll downward. So understand that if we move above this high, we're moving into an intermediate upward trend. If we move above this high and this high, then we're moving into a more broader upward trend. If we fail and roll over here today, okay, after establishing this new low, which is a breakdown low, indicating that we are in an intermediate downward trend right now. This is Fibonacci price theory. Then if we fail at this level, we're going to come down, try to take out this level and go lower. That's how Fibonacci price theory works. And again, this is Bitcoin, same basic setup over here. So we have the high up here. I've drawn it. We've got to get a closing price level and or a high up above this level. This would invalidate the breakdown mode. If we open up here and tank downward, let me spread this out. If we open up here to 604 and change area and we tank downward, this would be an invalidation, a rejection off of this high, indicating that we're going to come down and try to break below yesterday's low, which is right around this area. And we would indicate that we reject up here and are trying to move downward. So we either have to get above this level on a fairly strong close, this 604, 605 level, or we're going to reject and come back down. Okay, guys. And again, I'm getting a lot of comments. I started these plan your trade videos more than a year ago. And I think because of the comments I'm getting, and as someone put, the trolling, I mean, I'm not immune to trolling, but I didn't expect to be doing this for a year plus every morning. These are really for my subscribers. I think what I'm going to do is I'm going to start at the end of this month doing a weekly review, meaning that you will no longer get these looking into the future. You will get them at the end of every week, Friday. I'll go back over the patterns that you missed. I'll show you what's going on and pretty much still give you the past information, but not give you what's coming in the future. And the purpose behind this is, like I said, there's a lot of people that are, coming out and trolling and what have you. And it happens every time the markets go into a wild, crazy phase. But I never expected to do this and give this away for free for, 12, 15 months. The idea is this is designed to be pre-market, helping you out. And like I said, I think what's happening now is we've got a certain class of people that are out there kind of trolling. And so, the idea is this is still available. If you're a subscriber, you will get these pre-market videos come July. But end of June, I'm going to stop everything and I'm going to go ahead and do weekly wrap-ups. So every Friday, I'll try to do an end of week video showing you the patterns you missed and showing you what's going on. Still trying to help, but I think this is I've done this enough. I've shown you what I can do. And long and short of it, I'm kind of tired of having to answer. If this isn't helping you, general rule. If you don't like what I do, go find somebody else. It's that simple. Okay. All right, guys. That's it for now.